Chasers! Today's episode is about claiming a tax deduction for your personal superannuation contribution and the hidden trap if the relevant paperwork has not been completed, lodged and acknowledged as being received by your superannuation fund. I'm Chris Becks, your host, a business and financial advisor with over 40 years experience and the founder of the multi-award winning CBEX Business Solutions for Good. And as this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorized representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Now that is done, let's dive into this episode. So, you've made a personal superannuation contribution to your superannuation fund during the year and want to claim it as a tax deduction when you lodge your income tax return. To do this, you must complete a specific form called a Notice of Intent. It doesn't matter whether the personal superannuation contribution has been made to an industry, retail or self-managed superannuation fund. The rules are the same. But a Notice of Intent is more complex than many people realise and can cost you and your superannuation fund balance thousands of dollars if not done correctly. A Notice of Intent for superannuation contribution purposes is a formal declaration submitted by an individual to their superannuation fund. It is used to indicate the individual's intention to claim a tax deduction for personal superannuation contributions made to their superannuation fund. When an individual makes a personal contribution to their super fund, it is initially treated as an after-tax contribution. However, if they meet certain criteria, they may be eligible to claim a tax deduction for that contribution. To do so, they must lodge a valid Notice of Intent with their superannuation fund, notifying them of their intention to claim a deduction for the contribution. The Notice of Intent serves as a formal record and evidence of the individual's intention to claim a tax deduction. It is an important step in the process of maximising the tax benefits associated with personal superannuation contributions. And because all tax deductible contributions have 15% tax levied on them, the trustees of your superannuation fund are then notified via this document to withhold the tax on your personal superannuation contributions and forward that on to the tax office. When must the Notice of Intent be lodged? The Notice of Intent must be lodged within specific timeframes, typically before the individual's tax return is lodged, or if the tax return is not lodged by the end of the following financial year, before that deadline. Failing to lodge a valid Notice of Intent within the required timeframe may result in the individual not being able to claim the tax deduction for their personal superannuation contributions. The tax trap. Before you lodge your tax return to claim your personal superannuation contributions as a tax deduction, there is one crucial thing you need to do. You must wait until you've received the acknowledgement notice from the fund, confirming that the Notice of Intent has been received. Without this, there is no evidence that your superannuation fund is aware that you intend to claim those contributions as a tax deduction and withhold 15% tax from them and pass it on to the ATO. One common error we've seen is when advisors recommend customers make a personal contribution to their fund, intending to claim a deduction for part or all of it. However, since the customer's taxable income is unknown at that point, they wait for their accountant to confirm the level of taxable income before submitting the notice of intent to the fund. Unfortunately, the accountant may unknowingly lodge the tax return without being aware of the customer's intention to claim a deduction. By the time the tax return is lodged, it's too late for the customer to submit a valid notice of intent to the fund. In such cases, there is simply no way to claim a personal contribution as a tax deduction. The tax law doesn't provide any discretion to the ATO or the fund in this situation. Communication and coordination are the key. It's essential for advisors and accountants to work together closely, ensuring that everyone is aligned and fully aware of the customer's intentions. This way, potential issues can be addressed early on, avoiding the disappointment of missing out on valuable tax deductions. Therefore, in summary, number 1, make sure you have clearly made your intentions known to your accountant about claiming your personal superannuation contributions as a tax deduction on the tax return. Number 2, lodge your notice of intent within specific timeframes, typically before you lodge your tax return, or if the tax return is not lodged by the end of the following financial year, before that deadline. And 3, wait until you've received the acknowledgement notice from the fund, confirming that the notice of intent has been received before you lodge your tax return. Remember, attention to detail and timely action can save you from costly mistakes. Stay informed and get professional advice to ensure your notice of intent is submitted correctly and within the correct timeframes. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon. Have a great day.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram @CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.